highlight today. I want to bring it up because if you're not paying attention to this, you're going to miss it. This is the Russell. This is the Dow. And over on the left is the NASDAQ. If we go just before, what time was it? 9 o'clock. It was right in here. If you take a look at the market right after 9 o'clock, no, I'm sorry. It was 10 minutes into the day. Right there. And let's spread this out. So this is the NASDAQ on the left. This is the Russell in the middle. And this is the Dow on the right. You don't have to trade any of them. But if you trade the S&Ps, you should have an eye on these markets. There were 3 rejections that all happened at the same time. This one in the Russell, this one over here in the NASDAQ, and then this one over here in the Dow. You don't know that it's a rejection down in here, but you can start to make that determination and see it kind of send up in a V-shaped pattern by this time, by this time, by this time. And then you see those in all 3, and it gives you a rejection type of look, slap in the face that the temporary, this case, lows might be in. If you're not watching for something, that's the price action you could see just by looking and reading at a chart. And then you blow up the S&P and you take it back to the 9 or 838 central, and you got the same kind of V-shaped rejection out of the hole in the ES. Now, it's easy to see that now, but can you see it and telegraph that the probability that the upside might be the right side in here? The answer is yes, when you get the other 4 major indexes here in the US doing the same thing at the same time. You also could see a breakout through consolidation at the same time, which is another thing that we had our eyes on. Anytime you're looking at a market, you want to put yourself in a position to know, where is this market got one side or the other side nervous? And so it was right in here. We don't know about any of this, but we do know that it was sending out a congestion box with a swing high there and a swing high there and some swing highs there. And above the 44 or 46 area, there was a jump that we could get into here. We talked about it, but it wasn't just in the NASDAQ that made it clear or to made it promising. We went over and looked at the Dow, and you bring up the Dow at that same moment, you had the market, let's go, was right in, remember the price was 55, right? Now it went up 30 ticks before it fell off and ran lower, but it got through this swing high and these swing highs and this swing high. And if you don't know that, you'll be surprised when it happens and could put you on the wrong side and you get stopped out and then maybe it goes lower. But you always want to pull out congestion areas or boxes. You don't know any of this, but you should be able to pull up a box, and right in here, we're getting it as we speak. That should stick out. When you're looking at the right periodicity in any market, that should stick out. So this pop that just came of about 20 ticks is not a surprise. The middle of this box, very important and very pivotal. It's real-time analysis. Remember this, if you're going to just get your levels and just get your support, resistance, and lines in the sand when you start the day, then a lot of people are going to have similar lines and similar support resistance because everybody could see the same thing before the day starts. But when the day starts going, the information is changing. What are you doing to absorb that information and use it? Generally, most are not. Because the real-time analysis is tough. Let's just go and research what the hell already happened in order to try to predict what will happen. And let's ignore what's happening. The what's happening is the most important part of trading. And people want to ignore it because it's too hard or it's too difficult or I don't understand it. But if you want to be better than your competition, then do what they're not willing to do. And trust me, people are not willing to read the real time. It's too hard for them. It's not. It's just too hard for them to begin to try to learn it. They'd rather have arrows and rather have squiggly lines and they'd rather just have someone, for them to follow, and then get mad when that person they're following takes more heat than they're able to take, or they get mad for that person they're following takes a trade that they didn't take. So piggybacking isn't going to work in this business, and ignoring the real time isn't going to work. You're going to have to incorporate the real time and look at other markets, compare, contrast, read order flow the right way in order to highlight the best locations, the best timing to execute maybe your stupid idea. All ideas are stupid. All ideas and opinions are stupid. Trades are stupid. But if you can get good execution on stupid ideas, you're in the right neighborhood.